Hi, welcome to the Market Alert for Thursday, 27th of June 2019. Yesterday's roundup, Bitcoin soars most since 2017 as dollar drops and bond yields pop. However, we just scroll up here through a few news items. You will see here that Coinbase offline as cryptos collapse, Bitcoin loses 1,500 in minutes. We'll have a look at this in detail, and you won't be surprised by what you see when we get to it. But let's start off with the Dow for yesterday. Start with the daily chart. The market's fairly quiet this week, slow news week. Market drifting back a bit here. Yesterday doing exactly the same. So as we look as the intraday, you will see even in the pre-market session we had the usual punt to the upside, but it started to drift lower before we got to the cash market opening. As soon as the cash market opened, we had a sell signal. The market traded down to the 200 bar, and it took until early evening before the market actually broke through. It bounced back and then traded down to the next minor psychological level, and then attempted to come back once more, but found it hard work and then moved lower as prices traded into the overseas Asian session. You can see prices then finding support and then have since done the usual trick of running back up and are currently above the 200 bar and DP level. We continue no doubt in this direction in the pre-market session there. News today to move the markets. We've only got final GDP from the US 3.1. Fairyland stuff, but that's what they're going to be reporting later. Meanwhile, in the pound, in the daily chart, we're stuck in a bit of a sideways range again, as we have the ongoing selection of the new UK Prime Minister. It staggers me that this market hasn't fallen out of bed, and I'll maintain that there's obviously some sort of Bank of England intervention here. Yesterday's session, tiny range. You can see from this low to this high, we had a total of just 44 pips in this market yesterday, so very quiet. The market that made the news yesterday was Bitcoin. Look at the daily chart, you can see prices there rampant to the upside, and if we just have a look at the high, you'll see that prices above 13,000, closer to $14,000 for yesterday. You'll also see that prices have opened lower for the overnight market as well, and I suspect we're going to see a bit of a pullback in this market going forward. Also in the 4 hour you can see the drop, and when we get to the 15-minute in a minute, you'll see what I was talking about at the outset about how important it is to look at the average lines. So you'll see the market coming off those lows. It's found a bit of support, but it's making lower highs at the moment. So I wouldn't be at all surprised to see the market actually come back. So I'm just going to double click with the retracement tool twice here on the low of this big bar, and that gives us a 12,177 on the downside there. Sort of you get this sort of explosive climatic action in these markets, and if we look at the 15-minute, you'll see exactly what I mean. So yesterday the market ramping up. Remember, I was talking about shakeouts yesterday and spikes in volume. There was the catalyst for the upside. There was no warning on the downside. The increase in volume here, this is classic Bitcoin volatility, and then we see the market drop per 1,500. Where does it drop to? Well, what a surprise, straight down to the 200 bar moving average, and then the market reverses off this and retraces 45% immediately, then reverses 45%, and then you see the market eventually starting to retrace. If we get the markup here from the high down to this low, you'll see the market trading to the 76% retracement. You will also see the market retracing from here to this high here, also to 76% retracement as well. So again, you can see the market being tested at this level, and now prices are attempting to move back to the upside there. But in the bigger picture, it looks like we could do with a bit of a correction in this market, a bit of a pullback. We certainly have had a shakeout, that's for sure, with this sudden drop that we see here on the overnight. Pure manipulation going on here in this market. Meanwhile, in the implied volatility, and just to let you know, I'm currently working on some new graphics for this, so that we can use this in more detail. 1376 down from 1380 for yesterday. So I will keep you posted as that unfolds. Deutsche Bank bouncing off the 200 bar moving average here and off to the upside. Again, there seems to be a bit of movement to the upside on this one at the moment. You can see there in the daily chart, we've definitely got a dead cat bounce in progress here in this market at the moment. It's a matter of just how high it goes before it then continues to do this, which it's always done. If we have a look through here, you'll see many numbers of dead cat bounces before the market continues lower going through. You see them all the way through in this chart. So we'll keep an eye on this one. We'll drop that back to the hour. I want to see how the market's faring with the 200 bar moving average in this particular time frame. Yesterday we also saw the yield curve move back higher as well. That chart hasn't been updated yet. A spike in the yield, and that's consistent. If we actually look at the chart, we go to max, you will see that when we've had an inversion in the yield curve, you have to have that spike back to the upside to more or less confirm the recession, or what happens prior to the recession, as you can see there, and there. So that's what we are likely to be seeing going forward, of a spike, drop in the underlying futures and or in the bonds, and a spike in the interest rate there. Okay, that's a quick roundup. There's not a lot to move the stock market today as far as the downside is concerned, so I'll be at all surprised to see things stabilize and move slightly higher. The pound, we're still waiting for news. Bitcoin also could do with a bit of a breather. We'll see what happens there. And yeah, that will do it for this one. If there is anything, I will let you know. But otherwise, as ever, thanks for watching. See you in the next one.